Hi, my name is Venkatesh. I work as Dean Academics with Goa Institute of Management. On behalf of Goa Institute of Management and the centers which are working in the area of sustainability, I'm pleased to announce that we as an institution are embarking on a new journey of creating a repository of critical conversations around sustainability through podcasts. Today is the first small and yet a significant step for us as an institution. In today's event, we're going to debate and discuss about climate financing, and we as an institution would like to continue these critical conversations, curate them, and make it available to the world at large. And we like to be the fulcrum of critical conversations in this part of the world.
Hello everyone, welcome to Goa Institute of Management. I am Professor Aanchal Singh. I work as an assistant professor here at Goa Institute of Management with the Banking, Insurance and Financial Services program, and I'm also a member for the Center for Social Sensitivity and Action here at GIM. This is the first podcast in a series of initiatives that Goa Institute of Management has taken up, wherein we will be discussing about different issues and challenges related to the domain of sustainable finance. And here I am joined by Mr. Jena and Ms. Joanna. And I request Mr. Jena to kindly tell us about his motivation as to why he got into the domain of sustainable finance.
Thanks, nice to be here. Thanks for inviting me, and good to see that Goa Institute of Management is organizing such kind of podcast, which will help definitely the students of Goa Institute of Management who are going to join the corporate field and try to make some changes in the system, which is essential for climate actions. I spent around a decade in the financial sector. I didn't know anything about climate change and sustainability. Since 2016, when I joined, I thought that, okay, I am also contributing in some way in climate actions. Since climate change is a massive challenge, I will say that it is going to threaten our society, our economic system and our financial system. We need to do something. Okay, in my day-to-day job, I am supporting institutions. The institutions could be government policymakers, could be financial regulators, other players in the capital market to take decisions which will help in mobilizing capital for climate actions. I feel happy that I'm contributing in whatever way I can because I can only bring my skills, my experience in the financial sector. In some way, I'm also contributing to fight against climate change in the system. So that helps me, that keeps me going on.
That is quite some motivation, so actually I should say, right? So Ms. Joanna, if you can just share with us as to how did you get into this particular area?
Yeah, sure. So I started off in the private sector in marketing and PR, and I realized that actually if I was going to spend long hours working in an agency to promote a particular brand, then it really mattered to me that that brand had a positive footprint on the earth and not a negative one. And so I shifted into corporate responsibility and sustainability. We're talking 2002, so quite some time ago now, in the early days. And it's been a wonderful journey because when you realize when you're working with corporates on their footprint and their reporting, it really requires working with different stakeholders. So I then specialized in how does the private sector work with government, with NGOs, and with communities and wonderful institutions like GIM to create sustainable impact. And so that's been my speciality. And I feel very excited because I feel that it requires the whole system to change. And so we need to bring all the pieces together. Everyone has a different piece of the jigsaw puzzle. And so we need to figure out how we can put the puzzle together. And together we can shift our trajectory and create a more hopeful future. So I'm also feeling excited to be in the sector.
That is quite a big task which both of you have undertaken, I would rather say. When we actually talk about sustainable finance, how would you define it?
There is no scientific definition of sustainable finance, and the definition also differs from one country to another country. But if I give you a broad answer, the answer will be if we are able to mobilizing capital for sustainable development. Okay. If we see the 17 Sustainable Development Goal defined by United Nations, if we are able to mobilize capital to achieve this 17 Sustainable Development Goal without harming any of these goals, that is called sustainable finance. What happens that sometimes we are achieving a couple of goals, but we are harming the other goals. We cannot say that it is sustainable finance. From an investor or practitioner point of view, sustainable finance is to create financial returns for investors, at the same time create a positive impact on the society as well.
Okay, so when you talk about the different sustainable development goals given out by the United Nations, the 17 goals for that matter, you say that it is any initiative that the organizations are taking and mobilizing the financial resources towards achieving any of the goals comes under the purview of sustainable finance. So in that case, is there any difference between what we call climate finance and sustainable finance?
So broad definition is sustainable finance. Under that, there is environment. Under that, there is green. Then there is climate change. Climate change again divided into two parts: climate change mitigation and climate change adaptation. Capital flowing to climate change mitigation or climate change adaptation are called climate finance. If I add other green issues, environmental issues like biodiversity or pollutions, then we call it green finance.
Okay, so that is quite a broad classification. I mean, so from a layman's perspective, it becomes difficult to actually analyze the funds which is being diverted towards such initiatives, sustainable initiatives as the corporate sector normally calls it. They tend to confuse whether it's more towards a green activity or it is more being diverted towards the climate related activities.
Okay, it's a confusing things, not only for the investors, retail investors I'm talking about. Even it is a confusing terminology among experienced professionals also, as well as policymakers, because they are not able to differentiate between a green and climate finance or green or climate change or so. It is important for financial intermediaries who are selling these financial products to retail investors as well as institutional investors, that what kind of benefits it is likely to achieve by investing the capital. It is very, very critical. That's the reason you might have seen that there is a term called greenwashing, which is currently used because there are financial intermediaries, they are mis-selling products to investors by claiming that it is giving some environmental benefits or some climate benefits, and actually it's not doing so. So it is very important to define that product, what is the purpose of that product, at the same time make it as much as transparent as possible, so that investors can understand what is the use of the capital the investors has provided to that particular fund or to that particular financial products you are talking about. It could be a climate financial product, it could be an ESG fund, it could be a green bonds, it could be a transition bond. So it is important to be as transparent as possible. There are certain principles and framework which are developed by international institutions. Some of the financial regulators in domestic market, they have come out with guidelines that will help investors as well as compel the financial intermediaries to follow this guideline, so that there is enough transparency between investing company and investors.
Oh, that's great.
I'd love to just ask a question as a layperson with not much knowledge in climate finance. You said that it comes under environmental finance.
Right.
And I'm curious because we're sitting here in Goa and we're a coastal region, and we have a climate action plan which shows us that if we don't take certain measures, we're going to have some quite devastating results, which would impact not just the environment, but very much social and economic. So I'm really curious as to why it's stacked underneath the environmental and not necessarily linked to the other three. Please help me understand.
I think climate change, this concept has come from the Western Hemisphere because they are facing this climate change problems instead of overall environmental challenges we are facing, particularly in a developing country like India. For example, pollution is a big issue in Global South, particularly in the Southern Asia. But nobody is talking about pollution issue in the Western Hemisphere. Okay, we're only talking about climate change. Biodiversity is a big issue in Global South as well. For example, nobody is talking about climate change adaptation because India as a country and many states in India are highly vulnerable to climate change. Goa, particularly, it's one of the smallest coastal states in the country. It is also vulnerable to climate change, particularly sea level rise, and there is a possibility of hurricanes we'll witness in the future in Goa. Is the state prepared and make the state resilient to this kind of extreme weather events. We can see heat waves in Goa also for last couple of years. Now in winter, still I'm not sure wearing any sweater also in the winter season in Goa in the evening, which may be surprising for many people who have lived in the state.
No, absolutely, absolutely.
Okay, so in that case, moving ahead with the conversation, we have already talked about how would we probably can go about defining sustainable finance from a layman's perspective. But since there does not exist, on the spot definition that we can use to in general use as a guiding tool, how would you differentiate this new domain of climate finance or sustainable finance vis-a-vis to the traditional financial systems which have existed not only in India, across the world?
Let me clarify one thing. So there is a definition might come from the government of India. In the last budget, the finance minister announced that there would be a climate finance definition in the country. But let's see how many months or years government is going to take to come out with a definition, which will definitely help, particularly make it very, very transparent for companies as well as people who are putting their capital in companies. That's one part. Second part is when we are talking about financing, how it differs from conventional financing. Right. Historically, as a financiers, as an investor, we don't really consider the negative impact of finance. Because as a financiers, you are going to invest in real economies. Their economies could be a steel industry, could be cement, could be shipping. Okay, we don't directly contribute anything to GHG emission or greenhouse gas emission. Okay, but the money where we are putting, they are contributing. Okay, the question is that as an investor, am I considering those aspects in my lending and investment decisions? Okay, if I am considering that, okay, this company is carbon intensive in nature, okay, I should not provide capital because it's carbon intensive in nature. Even if I'm providing, is the company doing enough to reduce carbon emission? Because it's what is called in economics negative externalities they are emitting. But at the same time, there are other terminologies are used. For example, let's say if you providing capital only for clean energy, only for clean transportation, it is a pure form of climate finance. Here, your money is going towards to those technologies which are going to help us in reducing GHG emission. It could be renewable energy, it could be green hydrogen, or energy storage, which will store only clean energy, or energy efficiency. It is pure form of capital which are going to help us in reducing GHG emission. But certain types of capitals which may not immediately help us to reduce GHG emissions significantly, but still if you can add certain conditions when you are providing capital and compel corporations to reduce carbon emission over a period of time, that can also be considered as climate finance. There are certain financial instruments which are available and which are also used, but not at a massive scale, by investors and banks to provide capital to corporations so that they can take steps. We understand that there are certain industries which known as hard to decarbonize industries like steel, cement, shipping, airlines. You cannot expect them to be net zero in the next 2-3 years or 5 years. They will take a long time to achieve net zero because of the technological challenges. But at least they should put some efforts. Okay, and that effort should be a part of your financing decisions. Okay, should be a part of the financing contract. Okay, that can also be considered as climate finance. It could be renewable energy, it could be green hydrogen, or energy storage, which will store only clean energy, or energy efficiency. It is pure form of capital which are going to help us in reducing GHG emission. But certain types of capitals which may not immediately help us to reduce GHG emissions significantly, but still if you can add certain conditions when you are providing capital and compel corporations to reduce carbon emission over a period of time, that can also be considered as climate finance. There are certain financial instruments which are available and which are also used, but not at a massive scale, by investors and banks to provide capital to corporations so that they can take steps. We understand that there are certain industries which known as hard to decarbonize industries like steel, cement, shipping, airlines. You cannot expect them to be net zero in the next 2, 3 years or 5 years. They will take a long time to achieve net zero because of the technological challenges. But at least they should put some efforts. Okay, and that effort should be a part of your financing decisions. Okay, should be a part of the financing contract. Okay, that can also be considered as climate finance.
Okay, great. So in that case, for the traditional or the conventional form of financial practices or the reporting which you were talking about, there are certain guidelines which have been set by both Indian as well as international authorities, which guides the organizations or the corporations that this is how you're supposed to report on whatever initiatives or activities that you have undertaken in, say, probably 1 year. Is there any initiative for the sustainable finance as well, or probably the reporting guidelines which the organizations can use to disclose their sustainable finance related initiatives and activities to the stakeholders?
It's not restricted to sustainable finance. Most of the guidelines are related to what the companies are doing, how far they have been successful in sustainability practices. So we need to go back and understand that why companies report. The idea is that since climate change and sustainability is considered to be a material risk and opportunity, so it is important for corporations to disclose those information to investors so that they can take informed decisions. So they are disclosing information related to sustainability and climate change, not necessarily sustainable finance. Okay, but there are sustainable finance products, for example, green bonds, transition bonds, sustainable linked bonds, or even ESG funds, for example, which are pure play financial products. Okay, there you need disclose which companies you are investing. Okay, they are sustainable in nature. In your portfolio, why you have added those companies in your portfolio. For example, somebody who is using the proceeds of green bonds, those companies need to disclose how the money is used in climate actions. So it is restricted to financial instrument, not companies, to sustainable finance. Let me add another point. Financial regulators like central bank, and they are asking their regulated entities, it could be commercial banks in India, or non-banking financial companies, microfinance institutions. It's not a mandatory guideline from central bank, but they are indirectly asking, okay, it's something called in central bank operation, moral suasion. Okay, so they are indirectly asking, you need to disclose those risks to regulate, not only regulators, but the stakeholders, including depositor, shareholders, as well as your borrowers also. The borrowers need to understand that how you are following practices. If you restrict your carbon finance, if you say that, okay, next time I'm going to lend, I'm going to consider climate change, it means that you are sending a signal to your borrower, you follow practices which will help you to reduce carbon emission. Otherwise, you may not be able to get the capital. Even if you are getting, your cost of capital will increase. Okay, that will encourage companies to follow practices which will help them in reduce carbon emissions.
So the carbon emissions which you were just talking about sort of falls under the preview of net zero emissions. So if a company is trying to reduce their carbon emissions to a certain extent, if not zero, comes under the policy implications of net zero. And you recently published a book on net zero trio. So if you could just tell our viewers about that particular book.
Yeah, so thank you for asking this question. I would like to promote my book as well. Okay, so when we are talking about net zero, the global ambition is to reach net zero by 1950. India's target is 2050. India's ambition to reach net zero by 2070. The idea is that the entire economic system would reach net zero, not about individual companies. But at the same time, individual companies have a role to achieve net zero whatever possible. For certain industries to achieve net zero quicker, it's easy based on the kind of technologies they're using, based on the kinds of financing they need. And third is that whether the technology is commercially viable right now or going to be commercially viable in the future. Okay, these three things will determine how quickly companies can achieve net zero. In our book, what we have come out with, what we have covered, we have identified technologies. Although it's very well known what are the technologies are going to help countries, particularly in India, to achieve net zero. But at the same time, we understand that there are several challenges, okay, these technologies are facing to accelerate the adoption of net zero. We cannot wait till 2050 or 2070 to achieve net zero. So recently we came to know that global temperature has increased by 1.5 degrees since industrialization. So we have already crossed that limit. So we need to accelerate the adoption. Since we are talking about a market economy where private sector has a massive role, but unfortunately the capital mobilization for private sector is not enough. For example, globally we are able to mobilize close to 2 trillion, but we need $8 trillion of capital every year. For example, here in India, we need 150, $200 billion of capital every year. We are able to mobilize only 50 billion. So there is a gap. So it is a market failure. It means that there is an intervention required from the public actors. That's what we emphasized in the book. Okay, since the intervention required, what kind of intervention is required? Okay, in terms of financial policies, what is the role of the government in providing grants, concessional capital, providing innovative financial solutions, or institutions like World Bank, Asian Development Bank, what kind of capital they should provide to developing countries. Developing countries like India, they cannot do everything on their own. They need the support of developed countries as well as international institutions as well, particularly the financial support, as well as the kind of technologies needed by these countries so that they can accelerate this adoption. We also covered those in the book, what kind of public interventions is required. Number 3 is that as we know, capital, we need money all the time to adopt these technologies. It's only private sector can do, because as a public actor, you have limited amount of money, you have many other priorities also. So it is important private sector should realize that the importance of climate change, it will hit them, it will hit their top line, it will hit their bottom line in the future. At a macro level, the economy is going to be suffered. If the economy is going to be suffered, individual institution will also be suffered. Okay, how the private finance actors can play an active role in reorienting their capital from a carbon intensive businesses to low carbon businesses, which is also critical for their own benefits. And that also we covered in the book.
So, Ms. Joanne, the conversation which you were having before we started with the
Yes.
session, so you was telling me about some of the companies which, as he was talking about the privatization part of it, where the private players have to play a very major role because they are sitting on a lot of financial resources, as we can call it. So the sort of role that they can play. But what if the private players themselves are not interested in taking the initiative towards achieving the sustainable development goals or the net zero goals? How could we probably tackle that situation?
Yeah, I think you probably touch on it in your book around what are the incentives that can really drive these kinds of decisions. And we were just discussing that it was quite interesting. So I was working in the UK context and the European context before with big blue chip companies. And there was this real competition to be in a leadership position. So they want to demonstrate that they're doing the best at sustainability. But it was quite interesting in terms of the work that I've been doing with similar forms of business here, where and interviewing them and finding out that there was less of a focus on wanting to be a leader and more of a focus on compliance was what, I don't know whether that's something that you found also in terms of like the way that the private sector is approaching it.
Like you said, that it differs from country to country to institutions to institutions. For example, corporations will be more responsible where the stakeholders are very active. Particularly in Europe, the stakeholders are very active. When I'm talking about stakeholders, it could be courts, it could be regulatory institutions, it could be public. Okay, if they are exerting pressure on corporation to behave properly, and you will get your legal licenses, you will lose your legal license, you lose your social license also. Yes. Corporations operate with a social license. Without them, they will not be profitable at all. So the question is that whether stakeholders in India are that much engaged compared to Europe or United Kingdom. So that's very important. Okay, if stakeholders are active and nudging corporation or putting pressure on the corporation to behave responsibly, okay, they will look beyond compliance. So that's one of the reasons. So they are just following the rules and regulations of the country instead of going beyond that. But now we are at a time, so you need to go beyond compliance. Because as a democratic institution, nobody would like to punish or penalize corporations. Okay, particularly we are facing in a polarized world. So everybody will come out with incentives, okay? So you need to provide incentives to corporations to behave properly or invest in technologies which may not be profitable right now, may not meet their return on capital investment, but at the same time, they can be nudged. But it is important that stakeholders in any country should push this corporation to do something which is more than the compliance. But it's unfortunate that regulators are lagging. Okay, regulators should be ahead of the market. Many times, unfortunately, regulators lag the market. So it is important that regulators should be ahead of the market. And I think that it should be ahead of, before they listen to the stakeholders, they should be ahead of the curve so that they can force companies to behave properly.
So I'd just like to take the context that we're in here in Goa, because Goa is a state, a relatively small state with lots of villages, but going through a rapid urbanization process right now. And the question is, as people become more affluent and more middle class and want to have essentially what have to now been high footprint lifestyles, how can we encourage the choices on the, by people to choose lower footprint lifestyles, and what is the role of the government or the different companies or the ecosystem as a whole to help enable that kind of green transition? I'd love to hear your thoughts.
Yeah, no, I can understand that Goa, I mean, like all other states, Goa is little different from other states. Like you correctly said, that it's a small state, and there is so much of transitory populations coming into Goa, staying in few days, go back. So it's an extremely difficult situation for Goa. But the first thing we need to identify in the state that which are the source of carbon emission, whether it is coming from the transportation or building of houses or consuming a massive amount of energy or building infrastructure also. I can see that a massive infrastructure spending in the state. Okay. So then we need to see that what is possible, okay, how we can change the behavior. It will start with communication, okay, spreading awareness about climate change. Because since Goa is able to attract so much of tourists, they can learn something from the state as well, okay, and they can deploy whatever solutions Goa is following in their home state or home countries as well. So as a state, what we can do is that, okay, like you said, that urbanization means more and more buildings, okay, and more equipments, households equipment you are going to buy. Okay, can you think of something like green housing? You are going to buy more and more household appliances, and make sure that all the appliances you are buying are energy efficient in nature. Okay, and the kind of buildings you are designing, it should be climate resilient. Okay, so that you don't need so much of electricity or energy required to run the house. Okay, we can also see that it is possible to source electricity from, let's say, rooftop solar or so. Okay, instead of relying on grid. Now, grid is carbon intensive in nature. Still, we are relying on coal. The coal is contributing 70 to 75% of our electricity. Is that a possibility at home? Okay, so energy efficient buildings, green buildings, need to change the source of electricity. It means that it's an investment need to do. Yeah. Here you need the support of commercial banks who are providing capital. Now everything we do, we go to commercial banks to buy. Okay, the consumer finance is also increasing in India. But secondly, we think about, let's say, transportation issue in the state. Okay, can you deploy a massive public transit system instead of relying on individual vehicles like cars or two-wheelers or three-wheelers? Let's deploy public transportation system which can help us to reduce carbon emission. Okay, that's one of the ways. The alternative ways is that incentivizing electric vehicles. Okay, is there a possibility how the state can help the individual drivers in the state who have their own vehicles, as well as transport operators who are operating in the state? Okay, so can they come out with policies, incentivize companies as well as individuals to buy electric vehicles by investing in technologies which are not going to be invested by the private sector. For example, charging station is not a profitable business right now, but their government plays a role because as you correctly mentioned that you need to create an ecosystem. When you are creating an ecosystem, government should intervene where private sector fails. Okay, charging station is one of them. And second is the public transportation system are the two components where public sector plays a massive role. Okay, then also agriculture. Goa is still dependent on agriculture, and you just rightly mentioned that it's a combination of either city or a village. Okay, if you are following agriculture, agriculture is facing issues related to climate change. As you know that because of climate change, agriculture productivity is declining. Our farmers are going to be adversely affected. Okay, can we enable farmers to follow climate smart agriculture practices so that they can be resilient against extreme weather events? And secondly, can you help farmers to follow certain practices which would reduce the emission emanated from agriculture? Agriculture is still contributing 13-14% of GHG emission. Okay, although we cannot force farmers because anyway they are vulnerable, you cannot force them. But can we support farmers so that they can follow good practices which will help in reducing carbon emission?
Can I add the question of nature-based solutions in? Because as Goa has a huge natural wealth base in terms of forests and mangroves and many other biodiversity forms. And so I'm just curious, how would a state like Goa be able to access or encourage flows towards nature-based solutions?
Unfortunately, nature-based solutions, those properties are within the government. Okay, they control those properties. Okay, and the private companies or private individuals don't have rights, and these are considered to be public goods in nature. When anything is public good, it's extremely difficult to attract finance. Okay, how we can monetize? Let's say you just said mangrove. How can you monetize that? Who is getting the benefits of mangroves? Everybody is getting benefits, but who is going to pay for that? Okay, here the public sector plays an important role. You need to restore that mangroves we have. Okay, so the cost is only restoration. Okay, can you create a carbon credit, for example? Okay, if you can create carbon credit just through restoration of mangroves, that carbon credit can be sold in the international market, and the revenue generated from carbon credit can help in restoring, let's say, mangroves. Then secondly, can we connect with insurance companies, for example? Okay, because nowadays the role of insurance companies is becoming very critical. We just noticed what happened in Los Angeles. Many insurance companies, they decided not to renew. Okay, so you are in lots, okay, as an individuals or as a corporations. Now, if you ask insurance companies as a state, okay, we are following these practices, okay, can you invest a little bit amount in nature-based solutions so that your insurance payout will be lower in the future? Okay, so that's another way to get some money, because if you have mangrove, your economy will be much more resilient.
Yes.
Okay, the insurance payout will be lower. Here, insurance company is getting a small benefits. Sometimes in a extreme case, large benefits also. So can they pay a certain amount, but with a condition that it will be properly restored. Okay, so that is very critical.
And then probably maintained.
Of course, yes,
Yes.
yes.
So there's that ongoing livelihoods possibly around that also. Or
Yeah, so when we are talking about ongoing livelihood, it's absolutely correct. For example, if the state job is to enable or support people who are vulnerable to this climate change, it's state job. It is important for the state to equip themselves with those people so that they can fight and they survive, they prosper. Okay, you don't have a choice. We cannot ask a private actors to support the people who are vulnerable. It's the state job. We are transitioning. We should support people who are lagging. Okay, because in this economic transformation, some people will be extremely successful and many may lag also. We need to support them as well. But some people who have nothing to do with carbon emission, they are also getting suffered. There where public intervention is required, you need state support to help those people who are vulnerable.